If you're like me, the process of buying a meme coin goes like this. You either check your wallet tracker or scroll new pairs, see a funny coin, ape one soul, and frantically begin searching X or Telegrams for confirmation bias that this was a good idea. By the time you've read enough comments, you're down 80%. But what if, like the stock market, there were institutional research papers on meme coins and crypto that give you some extra insights? While you can't expect Barclays to write a 100-page report on Fartcoin or the 30,000 daily pumpfun launches, there have been a wave of independent research papers, and one from a major bank on the meme coin space in general, that can help you find patterns to identify the next 10-bagger. The first study comes from the Chinese University of Hong Kong, where a few locked-in quants decided to try and pull data from pumpfun to work out if there were trends between coins that absolutely gigasent and the ones that rugged. To do this, they used pumpfun comment sentiment, which is always an adventure, the average entry time into the coin, and basically the all-time high of the coin. What they found was fascinating. Essentially, meme coins in this study were placed into one of three groups. Cluster 0, which looked to be much more meme-based tokens, or derivatives of things like Pepe. Cluster 1 was animal-related tokens, and Cluster 2, political tokens. Although I don't know why they didn't call them Cluster 1, 2, and 3, but I'm not a quant, I wouldn't know. They did this by grouping keywords from the comments of each pumpfun coin. Interestingly, Cluster 0 had the highest positive to negative comment ratio, but it had less comments per user than the animal cluster. Maybe this is because people were quick to comment about how cute a dog is, or comment things like, "This is too cute not to send," which if I hear one more time, I'm going to headbutt a wall. But this cluster had the highest comments per user of all of them, while the average ape time is nearly 75% quicker than the first one. This in itself is really interesting. Cluster 0 has a more niche appeal because of the meme, but takes time to grow a community. While people flock to cute animals, ape much quicker upon seeing the chart and form a community around it afterwards. However, the niche memes typically rise a bit higher, with the average market cap being nearly 50% above the animal-related ones. Perhaps there's more room for community in the memes themselves than there are to an animal they have no attachment to other than it being cute. Then there's there's Cluster 2, which the study reveals a lot more bot action and a more bearish sentiment, which include fewer comments. But the quickest ape time of all of them was this one, with an average of 4 seconds. This kind of reinforces what we already knew. Political and celeb coins are always a nightmare to trade. If you've ever been trying to trade an election coin or an Elon Musk tweet or a Donald Trump coin, you'll know that it will take longer for you to go to the toilet than it would for your bag to evaporate. This is also something I've preached on the channel for a while. If you look at TikTok plays like Chill Guy or Rizmis, the same players panned out. Slower adoption where the coin will initially pump and then drop, but the niche of the meme prompts a cult-like following over time that eventually gives it that second, third, and in Chill Guy's case, 17th wave up to the millions. Now this isn't a definite guide, but it at least gives you a very rough template of what to expect when looking at certain coins. If it's political, don't hang around too much. If it's meme-based, a 60% drop might be scary, but who's to say it won't come back? Just like I Call Patrick Subaru did recently. It's actually a really interesting paper and one of the lone in existence where you can learn from someone that actually knows what they're doing. Unlike whatever this is, and I mean that in a nice way, I think. The intent is definitely positive, and as you can see, this is an official Congress document written by two concerned individuals with regards to the Melania and Trump tokens. They have every right to be. Nothing here is new or worth noting, except the last bit, that is. The purpose of the document is to try and enforce some kind of regulation to stop potentially exploitative measures like the Trump and Melania launch from hurting the people who have invested in them. It's a great point, it's a very moral one and something the authorities should absolutely be looking into. But then we get to the questions for the US Treasury and the SEC of all people. First up, is there a way to track and identify purchasers of these coins on either the primary or secondary trading markets? Yeah, you just go on SoulScan and scroll through thousands of pages. Have fun like the rest of us degens trying to find alpha wallets. Why is that being positioned to the SEC, the governing body of like all things financial in America? Why are they having to answer that question and not Google? Do our current foreign corruption laws prevent a foreign actor, such as a Russian oligarch or any foreign government or sovereign wealth fund, from purchasing these meme coins? No, I could have told you that. Will FinCEN report to Congress on annual trading activity for the Trump and Melania coins and any other future coin that the family launches? Yeah, let's have a quarterly Trump and Melania earnings report. Actually, that's not even a bad idea. Like, imagine doing lev trades before earnings like you're buying Nvidia options. I say bring on the degeneracy. Does FinCEN have policies and procedures in place to monitor trading activities and advise the White House when certain activities may conflict with the nation's interest? Quick, sir, you have to liquidate your bag. Why? Egg prices are up another 20% and we need more money. Like, you cannot make this up. I don't know what they think that a meme coin that clearly states on its website has no value or purpose actually is going to do in terms of national monetary gain or loss. But if they're thinking of it like an emergency fund or that there are going to be some kind of intercontinental interests at play, I think they're overstating the importance of a meme coin. But in all seriousness, it does make some good points. It notes a report about how now it's easier than ever for parties to claim favour with the president by, I don't know, boosting his bags 5% or something. Finally, after doing some digging, I was able to land this PDF of a Goldman Sachs 2025 outlook. Now, this was hidden behind a member paywall, but here's a little tip. If you just search the same term and add file type PDF, boom, free money. Or a guide on how not to lose it, I guess. They start off by saying, we've long argued that Bitcoin is a speculative trading asset, and the behavior of it and other cryptocurrencies in recent months only reinforce that view. Well, it is. I don't know what the counter to Bitcoin being a speculative trading asset would even be. But sure, okay. They actually go on to mention meme coins, which is kind of weird considering this is one of the biggest banks in the world talking about meme coins. They say they rallied beyond reason. I mean, I wish they all did. I might actually be able to afford food this week. I mentioned Dogecoin and SHIB and the market caps of these coins post-election. I love how in this section, when comparing Bitcoin to gold, they mention how gold is a strategic asset, yet Bitcoin is gambling. Surely any kind of security or asset is gambling? You're investing in something with the hopes of the price going up and the risk of it not doing that. Something like gold will inherently be less risky than Bitcoin, and while there are plenty of other papers I've found presenting the view that Bitcoin is purely speculative, we're hitting a point where there's simply too much money involved for it to be perceived that way. It's not Dogecoin, it has utility, and if it was such a degenerative asset, it wouldn't be pushed to be placed in ETFs or even being purchased by the US government. Now, you can argue that only confirms the sentiment, but in a world full of inflation and debt from the top down, there's a reason why there was a real push for CDCs and why Bitcoin itself has become such a prominent feature in the space. One that's growing closer and closer in correlation to the S&P 500. They then go on to say how they can't classify Bitcoin as an investable asset because it doesn't generate cash flow, present earnings, and there are no catalysts to move it outside of external forces, therefore meaning they can't value it properly. Now, this makes sense, but it won't stop me from buying a meme coin of a dog in a cute outfit. Can I value it? No, but if others do, and do so slightly higher than me, there's value, and that's all that matters here. But this is where the differences in thought paths lie, and while I hate to say it, Orangey of all people might actually be right.
It's something that hasn't even started.
Yeah. This is a institutional bank, one of the biggest in the world, and they can't grapple their head around why people value crypto the way they do, further giving more value to the people that are in early, and the late adopters like the banks will catch on in this hypothetical scenario. I mean, you can value a stock all you want. I can sit here and show you a penny stock, but if the big banks and the other entities and the big whale money don't accept my viewpoint, I'm not going to make any money. You have to be right as long as it's in line with where the big money's going, and that's kind of different with meme coins to a point. It also mentions how Bitcoin doesn't dampen volatility, and yeah, that bit I agree with, given the average 28-year-old Bitcoin holder looks like this. But what's interesting is that Goldman Sachs gave some price predictions in 2021, stating that there's above a 60% chance Bitcoin trades at $1 million in the next decade. How can they give that prediction, see that upside, and not endeavor in that at all because they can't value it? This is the main reason why so many people see crypto as such a rare opportunity. Even at these levels, if they don't want to hedge their clients' money on speculative assets, I think there should be a certain type of portfolio managed with these included for those willing to take a punt. Let me manage it. I mean, you know, I did find the Roaring Kitty wallets. I'm sure I can provide some value somewhere. I also love how they just randomly name Banana Tateball for a fleeting sentence. There's no reason, no actual analysis, but just a bizarrely random comment about someone paying $6 million for a banana taped to a wall. This is investment analysis in 2025. So what did we learn? Actually, quite a lot. Big banks don't like taking on risk, especially with crypto, although they do note the likelihood of a decade-long rally. Chinese quants have found a pattern to which meme coins send and why, giving you some extra food for thought while aping a coin, and some people in the government are yet to learn what the term blockchain actually means.